Hey guys, pleasure to be here again for another episode in our great show, the TradePod. And today I'm pleased and honored to have Ilan Alon. Ilan Alon is a professor in Ariel University in Israel, and I'm super excited to have you here today. So first of all, and before we start and jumping on, let's have a short introduction about yourself. So let us know who you are.
So I'm a professor of economics and business, specializing in crypto economics, Chinese economics, international business, and recently returned to Israel after a long stint abroad and contributing to the ecosystem here in Israel through advisory and through investments and through some friendships.
Incredible. How So you have started your career at so I'm looking in front of my screens right now at your profile, your LinkedIn profile, and you have like a really rich experience tab in. So you went to Cornell, you went to Harvard, you went to so many different locations upon the earth. So let us dive deep into your journey and what you have experienced so far.
So I suggest that people who are interested, maybe you could leave a link to my LinkedIn
I will. This
comment
is what we're
below.
doing regularly.
Because I would really like to delve into the situation that are happening in the world. I'm a professor with a very strong, let's say, social media footprint. So anybody who's interested in my views and my background, I have a YouTube channel where I teach a little bit about crypto economics in English. I have a LinkedIn profile that is rich with all the things that you just mentioned, background and so on. And I'm happy to discuss any topics that might be interested to your audience.
So crypto economics. Let's dive deep into that topic. You know, we're speaking about economics. The first thought that comes up to your mind is not crypto. It might be stock, might be other financial instrument or other financial market. But crypto economics, I think it's a developing space that demands really high intention. So I would like to ask you, and let's just dive deep more into that topic about crypto economics and so on, because I really think that it is a thing that it's building every day, and let's just build an understanding about how this world and the economics behind it work.
So do you invest right now? You're an investor, right?
Mhm.
Invest in the stock market, you invest in bonds. It's a question to you.
No, yeah, I'm focusing on futures, forex. I'm focusing on leverage instruments,
Okay.
less
And do
less
you have a
cryptocurrencies.
baseline investment in, let's say, S&P 500 or I don't know, some stocks in the Tel Aviv
Of
market or
course,
so
of
on?
course, of course, that I'm looking at underlying assets, and they do have a benchmark. S&P. Let's go for the S&P. Let's flow with the S&P.
No, I'm leading you in a particular direction for a reason, okay?
Yeah, yeah, yeah. I'm
I mean,
following you.
I'm trying to, I mean, I'm sorry, I'm professorial in my approach and I really believe in the Socrates school of thought, which is through dialogue, right? And through dialogue, you can learn a lot. So I'm just turning some of these questions on you to be able to demonstrate to the audience the importance of crypto economics, okay?
Go ahead.
So you're dealing aside from, what I would say, let's say esoteric instruments like futures, options, foreign exchanges, and so on. But just generally speaking, do you invest in stocks? Is my question.
Hmm. Yeah.
The answer is yes. How do you choose your
Hmm.
stocks?
How do I choose my stocks?
Yes.
I'm following a pattern by Jim Cramer, the bearish to bullish or bullish to bearish.
Mhm.
I'm just looking for instruments or stocks that drives. in a direction that like that all analysts goes by their behalf, and their beta is positive. I don't know. I'm looking over a few
Do
credentials
you look at
that we can all
fundamentals at
look.
all? Do you look at
Yeah,
fundamentals at all?
yeah, of course I gotta look at the
Yeah,
fundamentals.
yeah. So, and how do you know when you look at fundamentals whether they're good or bad? Like, what ratios do you use, and what kind of fundamental analysis do you do?
That's a great question. I'm actually trying to explore more about the industry itself, and based on my understanding and based of how I see the instrument, I have a derivative about all what I have read and all about what I have absorbed over the way, and this is how I don't know, try to predict or try to organize myself a way to invest properly.
Okay, and do you look at, I don't know, quick ratios or PE ratios or any one of these things? Do you kind of examine
Of
that?
course, consistently,
Now,
consistently.
how do we know, not only you, but also I and others use the same thing? How do we know that we should use all these different ratios to examine, the value of a stock so we could be better choosers of these stocks? How do we know all these things? We know all these
Uh,
things because these things you said yourself, you follow some book or you follow some methodology because some knowledge around these instruments was developed by economists, by social scientists. We publish various papers that examine the relationships between derivative instruments and underlying assets, between underlying assets and macroeconomic conditions, between underlying assets and different types of ratios that are embedded in each one of these instruments in the stock market. In the bond market, it's the same thing, right? When we look at bonds, that too has been widely studied in terms of what would be the impact of inflation or what would be the impact of a raise of interest rates by the Fed, etc. But what do we really know about crypto markets? What do we really know about the behavior of Bitcoin, the behavior of Ethereum, the behavior of any other cryptocurrency, or for that matter, the entire industry? Because it is an industry, right? It is an industry now. It's a sector of the economy, and it's growing quite fast. Where it's going to go, hard to tell. But how do we analyze it? That's a real difficult situation. So what I'm proposing is that we need to develop a speciality that examines this field in a scientific way using economic instruments and be able to understand the underlying relationships that exist between markets and cryptocurrencies, between the governance structure of the cryptocurrency and its sustainable development, the
wow.
consensus mechanism and the impact the consensus mechanism has on the value of the instrument, the network impact, right? How many people join and in what amount and in what context. So all these things are relatively unknown and therefore are worthy of a study.
Yeah,
And really
but
there,
they're
yeah.
relatively unknown because it's hard to build a scientific approach to analyze those markets because like you have mentioned all governance issues, and you have mentioned economic underlying factors, and you have a bunch of uncertainty among each and every factor that you're trying to insert up to onto the equation of how do you analyze it all, because
And
it's not
that's not
sustainable, it's
true.
high volatility.
And that's not true in the traditional economy. Of course, there's always multiple factors, and that's the whole point, right? So my
Yeah, but what
point
I'm
is
trying to say.
that you can do that actually. So I will respectfully disagree because I think that
Mhm.
we do have data dating back a good number of years on a daily level, so a very high granular level And we do have data from all these macroeconomic indicators, and we do have data on all the governance mechanisms, and we do have data on
So how
transaction
do you combine them
symbolic.
all into a puzzle?
So, so the ability to simply take all this data and be able to explore it in a in a causal way, right? Not just like look at correlations, but really understand the causal intermediaries, right? What is the pathology, right, of this phenomenon? How does different affect? So you have people like Lynn Alden who does a lot of technical analysis, and she sees the connection to M2, right? You have others who see it as a process of technological diffusion. So the different, and by the way, if you look at proof of stake mechanisms actually allow you to look at how you can get returns, right? Staking is actually an asset that gives you a return, right? So you could examine it perhaps in a similar way that you would a bond in terms of pricing mechanism. So I think it's really ripe for a lot of research, and that's my point. So you asked me, what is this field? This field is understanding the interrelationships between these cryptocurrencies and a variety of other financial instruments, as well as the macroeconomic and the governance structures. That's the field. The field can study it both theoretically and empirically, and that is actually where I have a number of PhD students right now who are working to make sense of all this industry and literature that is out there.
And
I
how
have
do you
one
guide them?
student. I have
How do
one
you direct
student.
them onto a
I'll
path?
be happy to introduce you to him. He's very eloquent. Originally from Argentina, and he's studying DeFi, decentralized finance, and he's studying the case of El Salvador, and he has access to the Spanish sources, so we will have a really good understanding of the process at the macroeconomic level, right? At the country level. We're looking into that. I have another student who came from the banking and financial sector, and he's going to look at how the phenomenon of crypto is related to the meme stock phenomenon, and whether there is in fact it's a kind of a bubble, or in fact, as institutional investors join in, is something that resembles something different, right? A different asset class. So we have quite a lot of research to do in this field, and it's quite exciting to be at the infancy of this research and knowledge creation.
Hmm. Sounds good. Now, taking that Elegant student onto a path that he's been investigating the case of El Salvador, and of course that he understands the language, uh, uh, but you know, exploring centralized markets, DeFi, I think it's a really broad, I don't know, subject to explore it. I don't really understand the direct mechanism to the crypto markets. Well, DeFi is totally understandable, but centralized markets to crypto, how do they synchronize? And what really pushes, like if speaking about CPI for a moment, and I would take the CPI and I would like put on a screen, I don't know, the euro dollar, I don't know, a future and a digital currency that I'll look at the same time. And I would like to try to understand or analyze in a much proper way the correlation between all those instruments. So between the foreign exchange instrument and the future, like I think it'll be highly tangible to see how their correlation really fluctuates into something that makes sense to a human mind. But to a crypto, I think it might be a mission. And
So
there's
there's two aspects to it. First of all, maybe your model is misspecified. Okay, in a sense, what I'm trying to say to you is that maybe you're not looking at the right indicators when you're looking at crypto and when
No,
you're
I'm trying
comparing it
to
to
ask you,
foreign
how do
exchange.
you build an equation to really understand the underlying the underlying instrument, and how to really analyze the instrument that you're desperately wants to trade?
So that's the beautiful thing about research, right? You really need to ask the research question in a very specific way and tackle one block at a time, right? You're not going to get all the answers from one research paper. Sorry. You know,
Hmm.
it's going to take tens of thousands of researchers to do tens of thousands of research papers that where the field will be built, right? And we will say, and by the way, it's already there. It's not totally there, but I offer to you to go to Google Scholar and to put whatever topic on crypto you want and see the very broad research that is done across disciplines from information systems to computer science to economics and finance. And I am a bit aware of some of this research because I'm on top of this research, right? So I am doing some of this research, and I'm leading some of this research. So we can get to the particulars of any particular research paper if you want, and I'm happy to even send you some of my own to
I would
understand
love
how
to.
we do things. But we might want to look, for example, at how in one paper that I did, announcements of central banks outside the United States impact crypto markets and be able to develop a methodology that measures the impact over time based on past evidence, right? And check how these indices have moved as a result of these events, right? Isolating everything else. We can look at the whether the governance structure that allows, let's say, stakeholders such as the original founders get larger portions of the total number of coins, and whether a quick or slow release, or whether an inflationary or deflationary, or whether different types of inflationary mechanisms might impact the value of the coin. And we can actually develop a very strong approach, a research approach to measure that, to check that, all other things equal, using a variety of regression analyses. The point that I'm trying to say is that obviously we're not going to know everything, and that's not the point. The point of research is to be able to, and for science in general, by the way, that's how science works, right? One block at a time, right? Standing on the research of previous people, what can I add to that? What other variable we haven't looked at, right? And so when I'm saying you might have misspecified the model, your mental model, right, but for trading crypto, I meant to say that maybe you're not looking at you don't have the right feed, right? And if you don't have the right feed for your model, you're going to make decisions on the feed of different variables. You're going to make the wrong decisions because you're not looking at the transmission mechanisms. And
Hmm.
we can break down the transmission mechanisms one at a time by doing research, right? By examining it, by testing it over time backwards using statistical techniques.
Hmm.
And that's
Yeah,
going back to your original question, what is crypto economics? And by the way, it's the same thing as learning, I don't know, real estate economics, right? I mean, the dimensions
you're
of,
right.
there are different type of variables, and they work over different time lags, and they have different type of impacts on the market. And the crypto markets, what's really interesting is that the speed at which things happen is what differentiates it. In other words, like, when we look at the real economy, if you're looking even at economic activity, you're looking at lagged variables mostly. You're looking, 1 quarter, 2 quarter backwards, and you're not looking forward. And the challenge that we have is really, what do we need to know the future about the economy? And what the best economists in the world, in my opinion, like Milton Friedman has given us, is that there is only one variable we need to look at, only one that will give us kind of a very strong sense of what will be the inflationary pressures, for example, on all sectors, and some sectors more than others, and that's money supply. What we know from all the research about monetary policy is that the money supply is one of the most significant variables in affecting almost all economic phenomena. from interest rates to inflation to asset pricing to net present value to just about all the major economic activity.
Mhm.
So, what do we know about the effect of money supply, the transmission mechanisms of money supply to specific asset classes like crypto? Is absolute fascinating question, right? And in fact, we're researching it now.
Why do you think it? Why do you think it's an absolute question?
So if you listen to Michael Saylor, and I don't know if you follow any of his videos, but he's the CEO of MicroStrategy, which is a Nasdaq listed company and one that has developed the strategy of holding Bitcoin as a major reserve asset, and not only holding Bitcoin but also taking more debt and issuing more stocks to buy even more Bitcoin, and now is one of the biggest Bitcoin holder in the world. He probably makes, some of the best arguments about why companies, countries, nonprofits, individuals should hold Bitcoin, should allocate Bitcoin in their portfolio as a reserve asset. And he's actually, walking the walk, not just talking, right? I mean, he's actually doing it
Yeah,
and has
that's true
done
too.
so with great financial success. But one of the things that he,
This is a financial success. This is a financial success to understand how to put Bitcoin as a reserve asset. I think it's an approach that no one took before Mr. Saylor.
that's
Correct
correct.
me if I'm
So
wrong, by the way.
in a way, it's a paradigm shift. And in fact, I have a paper now that I'm writing with one of my PhD students. And what we're trying to understand is whether this is a kind of the right strategy for corporate America in general, for all corporations. In other words, like, should we do net present value with discount rates? Should we hold bonds, an asset that generally doesn't keep value very well, as a reserve asset? Companies like Apple and Google and Microsoft hold billions of dollars in cash or cash-like instruments. And if we make that transition, right, to Bitcoin, which Michael Saylor is trying to champion, then we're starting to move toward the Bitcoin standard and in a different way, a different paradigm. We're not there yet, and we won't be there until more multinational companies will actually adopt that strategy.
Mhm. Now, talking about before the pod, we had a small conversation about geopolitical events, and we we dived deep into we dived like in small amounts into onto that topic, and I think it really fascinates how people approach the financial markets. How do they consume geopolitical events and how they affect the market and the tradable underlying assets. So, I would like to ask, out of your point of view, what geopolitical event will affect the S&P right now the most? Like considering that we have two wars that are going on, and they're affecting the world like in a really sustainable way that will, you know, putting less reserves onto different countries and we see bunch of problems like within the Israeli-Palestine war and the war in Russia against Ukraine. So there are some problems, there are some issues, and there are some aspects that might influence the tradable assets that we all trade. So how do you when you have such a big geopolitical event or like US elections or anything else which will impact geopolitical worldwide, how do you approach such an event in advance, and how do you think about it, and how do you try to build your safe a walkthrough to actually solve the problem or to dive deep into how to understand all the different occasions that might will happen?
Let me recast your question, maybe, and recast it in a simpler way, and tell me if you agree.
All right.
Um, I think what you're asking is how does geopolitical risk affect the different asset classes? And maybe secondarily, how may I profit from it? I think that's what you're asking, right?
Basically, yeah. But
Okay.
I was trying to give it
All
a
right.
little background.
So let me try to answer it. Any geopolitical risk event, okay, could be really under the umbrella of a country risk, or even a global risk, like a potential nuclear war, raises the risk in the marketplace. Okay,
Hmm.
raises the risk for all asset classes in particular to the asset classes affected, right? The Gaza Israel war is affecting Israel more than it affects America, right? And because we are in the center of it all, and same thing with Ukraine, it affects them physically and financially much more than it affects Israel or America, or for that matter, even Germany. So risk is not distributed equally. That is to say, some sectors, some people, some countries are going to be affected disproportionately by risk. Now, with respect to particular asset classes, I think that risk is not generally good for the stock market. This research is quite strong, showing that we don't need more than just common sense to realize that when there's risk, risky assets get impacted more. And in fact, what gets benefited usually from heightened political and country and geopolitical risks is usually government bonds, American government bonds, right? That's kind of the risk-free approach. And therefore, then when things are very crazy in the world, if you recall during COVID, for example, everybody ran to the US dollar and to US Treasury bonds that went up in
Hmm.
value significantly. So that's one. I think now the interesting point, and what I think with respect to Bitcoin owners and lovers, is that I think a lot of them see Bitcoin as a kind of an insurance against geopolitical risk, right? As a way to say, here I have an asset, a kind of a digital, almost like a commodity, digital gold, as it is called, and you would expect from their belief and theories that during geopolitical risk, that stable asset that has this fixed monetary supply will actually perform well. And what we see, at least from my experience, and again, remember, this is still a very young instrument, so there are things that I'm going to moderate what I'm going about to say, is that gold behaves differently than digital gold. The real metal gold acts differently than the digital gold. In fact, the correlation is not as high as you would expect, and that gold is still a standard for, let's say, geopolitical risk insurance. In other words, if there is I would make the hypothesis that if there is, God forbid, let's say an atomic bomb on Kiev, because the war has escalated, I guess that all the financial markets in Europe will collapse, 30, 40, 50% in one day. I guess that American bonds will go up significantly. I guess Bitcoin will also go down, and I guess that gold will go up. And the reason is that under these extreme conditions, I think people will probably resort to this kind of traditional asset that is known as a protection mechanism against geopolitical risk. Now, everything I said I will moderate it, is contextualized to here and now, because Bitcoin is an evolving asset class. It has some of the characteristics of commodities and some of the characteristics of money, and crypto in general has even some of the characteristics of a stock, okay, like a, you know many characteristics of other instruments, and Bitcoin in particular,
How do
as
you
a
identify
default,
which
may change its
characteristics
behavior.
an asset?
In other words, if we look at the stochastic behavior, right, the ups and downs of the
Mhm.
instrument, that may evolve once adoption becomes more widespread. Right now, it's, in
Yeah,
most
of course,
countries, it's
obviously.
less than 10%. Most of the people that are dealing with it, are probably speculators or people trying to get rich quick, or, we're talking about still a minority of the people who have significant investment in Bitcoin or use it in a significant way. So I think the critics of Bitcoin are right to say that, hey, the use case is still limited, but the pro Bitcoin are also right to say, hey, it's growing fast and eventually it will get there. It's a matter of time. So the question is, what do you believe over time will happen, right? If you believe greater adoption, if you believe that more and more institutional investors will come in, then it still works more like in terms of its like stochastic behavior, going again backwards, more like a Nasdaq stock in general than it does like gold per se in terms
Mhm.
of behavior.
Now, I wanted to ask you, um, you spoke about characteristics of many different instruments that you can identify within a digital asset. Now, I would like to ask you, how do you identify those characteristics inside a digital asset? And basically, how do you measure the risk, or how do you measure the amount of influence each characteristic has upon the tradable asset?
Now, you, by the way, asked a much better question than the one before. It's much more simple, direct, and looks for particular relationship between
You're a
two
direct
variables.
man. You're a direct man. You're a direct man. You don't like
So,
backgrounds.
uh,
So
so,
I won't fuck away.
so that's a much better question, and it sounds like that's exactly the kind of things that you need to do in a PhD program. Ask exactly that kind of question, and then delve in and research it. But to just give you a quick answer, I think that there are many type of measures for geopolitical risk. You don't need to reinvent it. It exists, right? There's companies who are measuring it, following it, score it. Now, in my own research experience, is that number one, there is a very strong correlation between the measures, and number two, they're still backwards looking. So the problem with risk measurement, or for that matter, growth measurement, or any measurement, is that most measurements in economics are backward looking.
Hmm.
We have very few kind of forward-looking instruments, and they're usually not 100% either, right? In terms of predictive value, whether it's sentiments, fear, greed, things like that, right? I mean, they're now casting perhaps, but they're not really a strong predictor, right? So what we want to try to understand is the fundamentals, right? Going back to, the fundamentals on the one hand, and on the other hand, the social consensus. I really do believe that paradigms have changed with respect to the impact of communities globally connected through different means, different social media, and they exert the huge impact on different instruments, for example. Uh, I can give you an example. For example, think about the cult of Elon Musk, right? And how, like, he could probably, go to his Dodge followers and say that X now is going to use Dodge, and Dodge is awesome, and you play with his little
This
Dodge
is
dog.
this is
That's
one of the
not
problems.
fundamental, right? That's
This is yeah, that's not fundamental, but this is but
but that's a use case.
that small announcement will skyrocket the asset. Now,
Right.
my next question will be, and by the way, let's speak about it right now. You spoke about technological models that you insert within your PhD your PhD papers that you're having with your PhD students, and I would like to ask you for such a young assets, how do you actually pick a model uh, a machine learning model, deep learning model, that really helps you and guides you to get a predicted outcome. Because I think this is hard because you don't have much data. The young assets don't really produce the same outputs each and every single time, and it's really hard to combine them all onto a regression model that will help you to
I'm
understand what may
smiling.
be
I'm
next
smiling
predicting.
because that's a again that's another thesis. Just one question that you asked. Boom. That's a very it's a narrow it's narrow enough that you can actually research it and get the answer. Actually, that's the nice thing. You should come do a PhD. It sounds like more and more.
You can invite me.
Yeah.
You can invite me.
Because
I would love
because
to be invited.
that's a super good researchable model question, and there are multiple models already in existence. There really are,
There are multiple models.
and maybe the best answer is some combination thereof. And I think you could look at diffusion of technology models, and if you assume it will follow the same S shape form of adoption as many other technologies, and you also assume that we are about 12% into it or 10% into it, different countries on a
Hmm.
different path, then we're still very early stage, but we do have, you know, a good number of years of data, right? I mean, definitely over a decade of data in most instruments, and at that level, and a level of granularity of minute by minute, hour by hour, day by day, month by month. I mean, that level of, that level of granularity across time provides a lot of data, actually, a lot of data, at least on the behavior of the instruments. Um, with respect to the predictors, right? And this is the problem, right? If we look at GDP data and we have takes 2 quarters to get data, oh yeah, we're in a recession, or no, we're not in a recession, and the data is very flawed to begin with, right? I mean, how we measure CPI or growth or PPI, for that matter, any of these macroeconomic indicators, there's tons of papers about all their flaws and problems, right? I think, maybe that's another dissertation question, right? Like, what are the forward-looking indicators that we can rely on that give us,
Or lagging
and
indicators,
by the way,
conversely.
I guess they will not be in the macroeconomic data. I guess they will be in the internet somewhere. I guess it's going to be in the Google Trends. I guess it's going to be in
Really?
places that we don't know yet. We don't know yet. So yeah. So for example, I did a paper on the prices of NFT during the NFT price, trying to understand why some NFTs are worth more and others less, right? Why all this discrepancy in the
NFT
NFT prices?
was a perfect booming for this world of
Yeah,
digital
but the
assets
question
and
is why
cryptocurrencies.
some were worth more and some were worth less, right? Like why I try to understand the variation in prices. Okay, yes, there was a boom,
What do you
but
mean?
why,
Because
like
looking
it's the
at
same, like by the
NFT,
way, it's the same thing like we try, why does Nvidia worth so much more in PE than, I don't know, Ford or whatever other, because we have certain theories to understand like what, forward looking, growth impact on stock prices, etc. So we assume that Nvidia is just going to make tons more money than Ford in the future, and that's why we're willing to pay a premium. So, the
mhm,
same questions can be asked on a variety of crypto projects as well. And what I found
mhm.
out is that when we ran the machine learning models and over tens of thousands of observations, and by the way, the study is online, and you can maybe put a link to your listeners. It's very easy to find.
I'll do it. I'll do it.
The study is also open, I think, open access. So what we found out is actually that it's the changes in Twitter community, not what they said per se, but the number of people that follow the NFT community, right? And so this phenomena of global communities and social consensus among global communities is like amazing. And it wasn't possible when the economic books were written, by Adam Smith and Hayek and
I
whoever
think
other,
I think
these. These things
I
didn't
think that
exist,
the
you
event
know?
that causes our understanding about immersive power was GameStop. Do you remember?
I do remember.
Everyone went to GameStop. The short squeeze was awesome,
Yes, it was.
and I
And
think
it
it
wasn't
surprised
only GameStop.
it all.
It was AMC, and it was Tilray, and it was many. The many were pumped, that were overly shorted, and I think it was a nice way, to hit the institutional shorters, and that was a cool retail phenomena. It was a retail phenomenon. Understand that.
Yeah,
And still, the problem with equivalency here, in your example, is that GameStop could issue more stocks and influence the supply of available stocks. And by
mm.
the way, even Israeli companies got caught up in that. I don't know if you remember Nano Dimensions. I'm a trader, right? I was in all these stocks. You can look back, look back, and NDM. It was the same thing. And the CEO and chairman of NNDM was like printing stocks like it's like the end of the world. That it was really, it was amazing because at that time, this 3D printing was also hot, if you remember, and everybody, were investing in 3D printing, and Nano Dimensions was in that industry. And it would be like something similar to, I don't know, a hot NFT, and then now like you're pumping like a lot of monkeys, and then the economics at the end work against you because you got too many monkeys out of the bag. So and and that's the beauty of Bitcoin, right? And that's the beauty of us saying, okay,
That's
that
beauty. I
was
mean,
great,
that's
that was great, that really highlighted the importance of this industry in a way, but it also highlighted the importance of its vulnerability in the sense that you need to have the right tokenomic structure. You need to have a kind of a value added in some way for each project. And, the social aspects are important to launch it and to get hype, but you still need to have some fundamentals. So the truth is there's some combination of social and fundamental, right, that has to happen. And by the way, that's also true in the stock market, right? That a lot of it is at the end the storytelling and the narrative behind this. And I work with a lot of startups, and I work with early invest IPOs and stuff like that, and pre-IPO investments. And a lot of times it's just like the narrative and getting the exciting story out there and getting people excited about what this project is doing. But at the end, if this project is not generating funds, in the case of stocks, or generating some type of value added in terms of crypto, then it's not going to survive the test of time. Time will tell.
I will only tell. All right, mate. Um, you know what? I do have one last question, if I may. Can
Okay.
I?
Shoot, shoot.
Great. So, speaking about crypto and everything else, and GameStop and everything, among large communities worldwide, and the predictive value by the end of 2025, for the cryptocurrency assets. What would you think that will happen to Bitcoin, Ethereum, and all the leading assets by the end of 2025, after 365 days of Trump in the presidential seat, in the United States, and of course he owns Elon.
Yeah, so my prediction, and it's very dangerous to make predictions on videos that will stay forever.
Please, by the way, this is a disclaimer. This is just a thought. This is
Not
not
investment
a
advice.
letting thought to follow. This is
It's a
just
thought, and if you don't
this
follow, you're stupid. No, I'm just joking. Okay, no, my prediction is
again disclaimer. Don't
um, they will just take
please
us
do
out of
your own
context.
thinking.
In future lawsuits, they will just take it out of context. Just that clip, right before you said it. All right. No, seriously, okay, I think that what I've learned as an investor and a researcher is that at the end of the day, the the amount of money that is printed, right? The liquidity in the market drives all asset prices up over time. So, I mean, generally speaking, you think about like Israeli real estate, right? Prices, and people are like, oh, will they go up? Yes, they will go up because the government is printing money, and that goes into asset inflation, right? Like my house is worth more now than 5 years ago, not because it's providing more services, but it's but because the shekel is buying me less house, right? And the same is true in dollars, and the same is true in all currencies. And you might go back and see that I just saw a picture on X of how much you could buy for $1 in the 1970s. It was like incredible. Like you could buy a lot of stuff with $1, with a single dollar, right? So let's start with the premise that in general, on the axis of time, ceteris paribus, no major nuclear war, no major, end of the world scenarios, climatic or otherwise. Asset prices go up over time, all asset prices. And now the question is which asset price will go up the most, right? And I suspect that if things stabilize from a regulatory point of view, I think that the cryptocurrencies are a once in a generation time to get wealthy in the same way that I don't know, in the roaring 20s you had the roaring stock market, with the caveat that the party can come to an end, right, at sometimes abruptly. And that is the nature of markets. The markets tend to go through cycles of crises every 10 years, roughly. Sometimes 8, sometimes 12. But something big and major happens around the world every 10 years. And astute investors time it a bit. They say, okay, oil went down below zero, minus 40. Probably it will not stay there. I should buy oil, right? At this
Mm-hmm.
moment, it seems to me that it's worth to have a portfolio um, uh, exposure to cryptocurrencies, and particularly to Bitcoin, because Bitcoin is all the hype, and particularly because of the Trump administration that is interested in moving all the Bitcoin, making America Bitcoin capital. And think about what he said for a moment. I think people didn't digest it sufficiently. He said that he wants most mining to happen in the United States of America. And what that means is that America will be able to actually control the consensus of the Bitcoin network. America will be able to say, change the ledger by force. Um, that's that's quite significant when you think about it. If America has more than 51% of the mining power, can America legislate changes in the ledger by controlling the companies that control the ledger? I wonder. This is something I wonder about. So, ultimate power is not good for Bitcoin. If any one body like the United States government, or for that matter, MicroStrategy, start taking so much control of Bitcoin that they are now can manipulate the price, that's also, I think, goes against the ethos of Bitcoin. But luckily, Bitcoin has competition, and I welcome competition in a free market, right? Other cryptocurrencies that do similar things to Bitcoin. So if Bitcoin become corrupted, there will be other type of currencies that will replace it. But what's for sure is this industry is not going away. And what's probably needed is a top 50, like we have like a for S&P 500. We started with this conversation when I asked you that. S&P 500 is both a fundamental and a momentum play, right? Because the S&P
Mm-hmm.
changes regularly, right, to update the most valuable companies, right? Nvidia replaced Intel, for example, in the latest iteration. So, in a sense, the S&P has really strong companies with strong financials, right? And it's updated because it brings in the latest stars into the group. We need probably something like we need a crypto 30. I think Coinbase might have already a crypto 50 or crypto 30 or crypto 10 or some type of crypto baskets that will allow people to participate in this industry probably beyond Bitcoin.
which is important,
By the way, Bitcoin
which is
maximalists
highly
will hate me
important.
say that, and I'm kind of hated on both sides. I just had this Omer Moav do a hit piece on me in Facebook with the piece that I did with Ben Samocha. And at the same time, I think the Bitcoin Israeli Association probably won't like if I say that there's other coins that are worthy of investments, and it's a new instrument, and I welcome it. And there will be stable coins, and there will be asset-backed coins, and there will be all sort of coins, and I welcome competition. I think that's a good thing.
Great, 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 great. Ilan, thank you for being here. It was an incredible pleasure listening to you. You're such a wise man with a wise background in finance, and all of your thinking streams are incredibly amazing. And it was a pleasure talking to you and having you on our show, The Trade. But so thank you for the participation.
I look forward to the feedback.
It's amazing. All right, mate. Thank you. I appreciate it. Bye bye.
Bye.